we went from such a low rate to a much higher rate in such a short amount of time that has caused the housing market to get stuck. And now what's really concerning to economists and to the Fed in particular is that the labor market is dragging and job creation is slowing, in addition to the housing market being slow and the number of transactions. Now, why is that important? The housing market represents almost 18% of GDP in the United States of America. That's a really big deal, okay? So when you have almost 1/4 of the US economy at a standstill in terms of the numbers of transactions that are happening, that's a major economic concern. So the federal government, state governments really need to be thinking critically about what can they do to get transactions rolling again. Because think about a transaction, us as realtors, how many things does it spur, right? Like how many, we send recommendations around all the time to each other in our own little network here. Think about what it spurs, right? Home inspectors, pest inspectors. What were some of the recommendations this week? Builders to build a custom built home, estate sales, right? Like all of these ancillary businesses that are prevalent because of transactions happening. They're struggling too because transactions are so low. So we've got to get beyond this. So does anybody know? Well, for those of you watching the housing market, you can't hear my audience, so I'm just going to answer the question. The reason why the yield for bonds is decreasing is because there's more demand for bonds. And the reason why there's more demand for bonds is because people in general are kind of freaking out about the labor markets, which are causing concern for recession. So investors are seeking more stable investments in bonds rather than equities, i.e. the stock market. So when investors are running to a more safe investment, such as bonds, the yield goes down and also the 30-year fixed follows that rate, okay? So a recession could actually greatly help the housing market. It could possibly be the thing that actually gets the housing market going again, and then ultimately gets us out of a recession. So it might just be an inevitable thing that we have to dip into a recession for rates to come back, for people to put their house on the market and get things going again, and the whole economy will rise because, again, 18% of GDP is created by the housing market.